Today's show is brought to you by Amplify ETFs. Let's talk about cows for a second. No, Ben, I'm not talking about farm animals. I'm talking about cash cows. You know what I'm talking about?
I gotcha.
Yeah? Okay. The ticker is cows. This ETF, it's high free cash flow, meets dividend growth. The strategy is focused on high free cash flow. Those are companies that pay and have historically grown their dividends. So not just dividend payers, but growers. And it's not looking only backwards. It also uses some metrics that use forward free cash flow that delivers a portfolio that balances past and forecasted cash flow potential.
I like it. So it also equal weight portfolio. They cap industry exposure at 24%. They also have HCOW, which is a new one, which is the same strategy, high free cash flow, high dividend growers, but they also use S&P 500 call income strategy. So looking at dividends. So this is like a double income strategy.
So hot right now, those income option overlay strategies.
So for this one, they're also looking for dividend payers, but they exclude companies with payout ratios above 75%. That's like getting rid of the ones that are paying high dividends because they're in trouble.
Accidental high yielders, as we call them in the biz.
Yes. So check out cows and HCOW. Also, this is interesting. I've never heard this before. The fund investment advisors agreed to waive the management fee for cows until at least September 11th, 2024. Almost a year with no management fee. That's pretty good. Go to amplifyetfs.com to learn more.
Welcome to Animal Spirits with Michael and Ben. Before we get started, I have an exciting announcement to make for financial advisors. We have a new show coming on. It's called The Smoke Show, where companies that bring services to financial advisors, whether it's a wealth tech company or an asset management company or a cash management company, if you're a financial advisor and you want to stay on top of the latest companies that are going to help you grow your business, The Smoke Show is a place to be. So it's sort of like in the Shark Tank style, where there'll be Josh is going to be hosting the show. Josh Brown will be hosting the show, and there's going to be judges judging a company. Now these are not brand new companies, right? It's not like we're gonna say like I'm out, this stinks or anything like that. But they will be judged harshly in some cases if need be.
And we get a lot of pitches from these kind of companies. Not to brag,
Tons.
we have a little bit of a platform, but we get a lot of pitches. So we think, we have enough people on board, especially at the firm and with us, that can judge these kind of things.
So here's the format. It's going to be on Zoom. I think we have a maximum number of seats is 500. And it's going to be live, so it's not edited. So this is why it's called The Smoke Show. That we are going to be bringing the smoke to the companies that come on and pitch. The first company that's going to be coming on is Virtual Wealth, which we're super excited about. Now, full disclosure, we are invested in Virtual Wealth, and not every company that comes on the Smoke Show is going to be for our benefit where we're investors. But we are very familiar with Virtual Wealth, and thought that they were a great candidate for the first show. So again, if you're a financial advisor, link in show notes, et cetera, et cetera, et cetera.
All right. Inflation day today. Still pretty exciting. I feel like it's going to lose its luster eventually. Today was kind of a good one. Inflation came in under expectations. I think the one thing you can say is that the Fed has wrung out any volatility. Like we had so many months there for there was, a 6 or 8 month period where it was really uncertain what the inflation rate was going to be. And it could have been surprising in both directions. A lot of times it was surprising to the upside. So now it's 3.2%. And you know what I'm sick of? I got a lot of bones to pick today.
Okay, go. Cook. I'm gonna sit back.
The people who say, well, inflation is cumulative, the rate is falling, but who doesn't know that? I'm sorry at this point. Stop saying that. Everyone knows that. Literally. We know prices aren't falling. All right, so look at this. I'm sorry I keep saying this. It looks transitory. In the history books, when we look back, I know it wasn't because it took longer. So I did the inflation rate now versus the World War II. Looks pretty similar to that, doesn't it? That peaked out at almost 20%, which is just a tad higher than us.
It wasn't transitory.
I'm saying, if you look back at this chart in 20 years.
You're sorry. I'm also sorry that you're sorry, but it's not transitory because the prices didn't go back down. The pace of inflation was transitory. Fine. Who gives a shit? Everything's still expensive.
To my earlier point, of course, prices are not going to go back down. That doesn't work like that. Okay.
So I can't be mad?
No. I looked at inflation going back to 1950.
It was transitory. Oh, no. Okay. Dude, the base is now ridiculously high. Casamigos at Madison Square Garden will never be less than $44.
Okay. I looked back at inflation going back to 1950. How many times do you think we've ever had a deflationary monthly print in that 70 plus years? How many times? Out of
Where
900 monthly readings, how many times have we had deflation where prices fell?
I don't know, 100? Is that
30.
crazy?
It's like
30. Okay.
3.7% of the time. We literally never had deflation after the 1970s. In the 80s and 90s, there was no deflation. The only time we've had deflation was a couple times in the 1950s and then in 2008 and 2009. That's it.
So
We
what's your
don't
point?
get deflation because the economy grows. People who
Yeah.
think prices are going to fall are people. So people keep saying that we're out of touch, right? We got another email last week saying we're out of touch. You keep saying the economy's doing okay. Don't you realize that prices are still high? If you think prices are going to fall, you are out of touch. It doesn't work like that. Inflation does not rise and then go into deflation so prices they don't round trip. It does not work like that because wages don't do that. I'm so sick of this argument. Is that fair?
I mean,
People who argue so here, this is from the Fed. Lisa Cook, Fed Governor Lisa Cook. Most Americans are not just looking for disinflation. You and I, as macroeconomists, are looking for disinflation. They're looking for deflation. They want these prices back to where they were before the pandemic.
yeah, it's never going to happen. And
I'm
this
sorry.
Is what
People are irrational about the economy. People who say, well, it's the economists who are out of touch. No, people who think like this are out of touch. The economy does not work like this. And if it did, we'd have a freaking depression every 5 years. You don't want that because your wages would crash.
Yeah, no, you're not wrong, but I think that you're also like, this is why people are upset though. High prices suck and they're not going back. And so it's going to take a while for people to digest these higher prices and be like, all right, I guess this is what I'm paying for a sandwich now. Like I'm never paying $11 again for a sandwich. I guess it's now 14.
I'm sick of people saying like, listen, the economy's way worse than you think because of prices. Prices should go back to 2019 levels. It's never going to work like that. Sorry, it's not.
Yeah.
The economy would have to crash if that happened.
So inflation was not transitory because prices did not return
20 years from now, they're going to look back at this chart and go, it's kind of transitory. Meaning it was a blip in higher inflation. That's what transitory means.
All right,
it's
fine.
not permanent.
Well, okay. So the stock market is reacting very well today. Taking the lead, it's home builders, and these are all, interest rate sensitive areas. Home builders up 5.3%, ARC up 5%, small cap value, a lot of regional banks in there up 4%, Russell 2000 up 4%. All right, so stock market likes it.
Remember higher for longer? For like a week?
Yeah, how long ago was our episode where we said consensus is higher for longer? Not even 2 months ago, was it?
I think it was like 2 weeks ago.
Now the market is pricing at a 20% chance of a rate cut by 2024. Now let me ask you this. Are they going to cut rates if inflation keeps falling and the economy is continuing to do okay?
They have to. So we're jumping around a little bit here in the doc.
Why do they have to?
Oh, they should. But so Tim Dye of SGH Macro Advisors wrote last week, it's increasingly clear that the Fed has reached the peak of this cycle back in July. We can begin wargaming the first rate cut of the cycle, and that's before this week. I tend to agree with Cam Harvey, though. So Cam Harvey, he was on the live show with you and Josh last week and Barry, and he basically said, here's his 3 points that I took away from his talk. The consumer basically saved the Fed's ass this year, which I kind of agree with. It wasn't really the Fed that orchestrated this. It was the consumer. The Fed is probably going to be late in terms of rate cuts, and I think that they want to be late because there are no counterfactuals if we don't have a recession, right? So I think the Fed wants to save us. So that'd be my biggest worry, is that the Fed is going to wait too long and keep rates higher. I'd be happy to be proved wrong, but I think at this point, so March is when they're probably going to cut the first time.
Well, it's a 20% chance. That's what the market is implying right now. So we'll see.
Okay. So back to the transitory stuff. Callie Cox, who was also, she was on TCAF last week.
I'm sorry, Ben. I love you. This is not. It's not transitory. It wasn't. It's too long.
It's transitory in that the inflation wasn't permanent. Like the high inflation rate.
But I know we keep talking past each other. The rate wasn't permanent, but the price increases were permanent, and that's all that people care about.
I know, and they always are, though.
But this is the type of thing that is missed in a textbook, because we know we're living today. People don't. It doesn't matter. It's not the pace. It's not the rate of increases. It's the price levels.
I'm sorry.
That's all that matters.
I think our best call we've ever had in this show is being anti-survey, and I think all of the surveys of the economy today don't make any sense. People saying that they're not better off and these sorts of things. People are legitimately better off financially. I'm sorry.
There's a survey later in the show that we'll get to. It was like 60% of people want a recession, so prices fall. home prices fall or something like ridiculous like
Careful
that.
what you ask for. So this is the part that it could have been. So
And by the way, Ben, speaking of people calling us out of touch, I don't want to overstate. I mean, come on, it's like we get like one email a week. It's not like we have a tidal wave of people saying that to us.
Well, I get it on Twitter like twice a day.
Okay.
Because I always poke the bear there because I just love going after doomers on Twitter. It thrills me to no end, and then I block them. All right. Callie Cox said the second coming of inflation crisis was just a story about oil prices. If you picked up on that like we did, you didn't sweat the sell-off. So she's showing that like the big part in early 2022 was a lot of oil, and that has kind of reversed. Do you remember the $200 oil stories back in 2022? I think it's now below 80.
Remember lumber?
I have to say, like, hand up, I never would have guessed this with oil. With the war continuing to rage, I would never have guessed that. Here's another one from Callie Cox, though. You got her name right when you saw her in person, right?
Yeah.
Remember you couldn't figure it out which one it was?
Well, because her handle's Callie A. Bost. No, it's Callie Cox.
All right. Paychecks are still growing faster than prices. I'm sorry. People complain when this happens the other way. No one celebrates it when it reverts. You know what we are?
What?
No. I'm sorry. Everyone's spoiled. That's where I've fallen. Most people are spoiled. There are people who legitimately...
we love to complain. We love to complain. I think we hit the nail on the head. People get used to their wage increases very quickly. They adjust mentally. Oh, cool. I got paid more. And then like 6 pay cycles later, they're over it, but they don't adjust to how much they're paying for everything.
All right, here's a couple of examples. I think there are certainly people in the economy that have a legitimate gripe about inflation and deserve to be complaining about it because of their job or the industry they work in or their particular like budget line items. But there are other people who are doing just fine. And there's people who rocketed so far ahead of everyone else in the 2000s and 2010s that even if things are slowing for them now, they got so far ahead of the game, like in terms of wealth or whatever, that you don't get to complain anymore. So this is an interesting one from this guy on Twitter. The economy can be summed up by an experience I had at a recent family reunion. Everyone was complaining about how shit the economy was and how expensive everything was. I pointed out that for the first time ever, every adult present had a good paying job they liked. 3 people present had just been bragging about doubling their salaries. 2 people had just gotten back from their first ever Europe trips. The raises and jobs were things they felt they had earned. The prices were going up were the government's fault.
Yes. Perfect. Exactly.
Okay, but look at this next one from Torsten Slok at Apollo.
This is great.
So the record high share of U.S. consumers are planning to go on vacation to a foreign country, and this thing has skyrocketed in the last couple of years.
It looks like 2024 is going to be a recession.
I'm sorry, but if you drive like an $80,000 truck or SUV and you're taking European vacations, you don't get to complain about inflation. Those are the rules, okay?
Yep.
Right? Like there are people who have legitimate gripes, but the people who are like going crazy and keep spending like inflation is not here. Like, I'm sorry, you have to adjust your habits if inflation is that bad for you.
People just love to complain.
I think so. So this is a good one from Ben Walsh. Then I'll let this
Could you believe?
Yeah. The median voter wants double-digit deflation, a booming economy, a tight labor market except for low-level service workers, and rising home prices except when they want to buy. And frankly, is that too much to ask for? Right? Again, there are people with legitimate gripes right now, but I think a lot of people are complaining for the sake of complaining and don't deserve to because they're in such a better spot than they would have been, especially like as far as wealth goes. The people who complain about ZERP and the government stepping in to help in the pandemic that have benefited the most from asset prices rising, and they're the ones complaining about inflation. Like you're so much better off financially than you would have been in the alternative to that situation.
You're right.
You really want the economy to crash and you're everything you own is worth half as much?
There was a segment of the economy for sure, as there always is, that is getting a raw deal that got the short end of the stick for, various reasons.
Yeah, and those people have a legitimate gripe.
Yeah,
about
but
inflation.
You're right. If you're driving a $70,000 truck and you're taking a vacation overseas, just please shut the up, please.
Yeah, that's all I'm asking for. I don't want to hear from those people anymore.
Speaking of inflation, we spoke about this earlier a couple months back. Like, just because there's like supply chain issues and too much stimulus and inflation, that you have that on the one hand, but then on the other hand, you've got like the technology, the disinflationary force of technology, and like where does that fit into all of this? Remember that conversation? And it didn't stop. It's not slowing down. So somebody sent this to us. Here's a great chart. The price of every iPhone adjusted for inflation. And
that's interesting. So the iPhone adjusted for inflation hasn't really rose that much in price since the first one.
No, not at all. It's the price is the same, is below in real dollars. The iPhone is cheaper today than it was in 2008 and 2009. And I
That's interesting.
imagine
I wouldn't have thought about it that way.
and look at the Pro. So look how expensive the first version of the Pro was. $1,250, $1,212, $1,190, $1,180, and now it's below $1,000. The Pro Max, same story. Every iPhone has gotten cheaper and cheaper and cheaper, and will continue to.
I think the hard part is for a lot of people is that it's like we're still getting inflation in the things we need, but deflation in the things we want.
Right.
Although for a lot of people, maybe a smartphone is something you need now. And
guess what? I keep getting texts from Verizon. I don't think they're scam. I think they're legitimate text messages from Verizon that I could just trade in my iPhone.
Right.
Right? Or it's like, $400. I mean, the iPhone is for what it is ridiculously cheap.
Yes, for everything, the supercomputer that you have in your pocket, it's amazing. So do you think, getting back to the rate stuff, do you think if the Fed came out today and said, and they would never do this because they're always going to be late about everything. If they said, we declare victory, we won. What do you?
Not gonna happen.
but they potentially could do that if they would never. They could. Do you think the 5% we saw in the 10-year is the peak? Because it's already back to 4.5, less than 4.5. It was there. I feel like the bond market believed higher for longer for like a month, and then now it's dropping. Like, do you think 5% will look back and be like, that's the peak of the cycle?
Yes.
I tend to agree.
I don't know. What would have to happen for inflation reaccelerating? The economy like just booming in the first half of 2024? I don't see it.
And I don't think that if the Fed cuts in 2024, I don't think that's going to like help the economy boom. Just like them raising rates didn't totally slow the economy. Like I don't, if the Fed cuts 50 or 75 basis points next year, whatever it is, assuming we don't get a recession, I don't think that's going to like cause the economy to go crazy.
Oh, I do.
I think it'll be better for financial assets than it will be the economy.
Both, because
housing
will explode, absolutely explode. The IPO market will reopen. Asset prices will go bananas, and we could get a boom, and that could be bad for the economy. Paradoxically,
you don't think the market will pull forward a lot of that?
No, I don't.
The NASDAQ is up. I looked at this. You know the NASDAQ's up year to date now as of this morning?
32%.
NASDAQ 100. 42%.
Wow.
The S&P is up 17%.
So you think that the stock market is already pricing in cuts?
Definitely.
Could be.
I say definitely. Look, I know.
Yeah.
I think.
No, could be. Listen, I like that you're not. This is, normally you're a Grand Rapid hedge guy. I like that you're taking a stand.
I think the market has been pulling. I think the stock market has been smarter about the last 3 years than any other sort of market or prognosticator. Maybe I'm giving it too much credit, but I think the stock market has been ahead of the game on a lot of this stuff. Okay, let's talk about some the potential downsides to right now, because inflation is looking pretty good. The unemployment rate has gone from 3.4% to 3.9%. You've heard of the SOM rule before. Claudia Sahm is the SOM rule.
No, I haven't. I have not.
Okay, so I think it's relatively new. She's an economist, and I think she used to work for the Fed. And her rule is when there is a 3-month moving average of national unemployment rate rising by 0.5%, which we've done. We've gone up by 0.5. We haven't been there for the moving average. Relative to its low, we are in a recession. So we just triggered that. So it hasn't triggered yet because we haven't been there for 3 months yet. We just hit 3.9%. So she's saying if we stayed at this level of unemployment for another 3 months, that's basically so look at I put it in here from Y charts. They have it in there. That it's basically a recession. So like unemployment rate moving up by that much and staying at that elevated level triggers a recession. And her way of her reason for coming up with this rule was just that's the time for the government to start stimulating the economy, which is kind of hilarious because like that would really happen right now.
But what about when unemployment is so low?
Well, it's been low in the past, but yeah, that could be, maybe that's your counter. But so we're not there yet, but it's actually like unemployment rate moving up in the labor market slowing a little bit has to be like a kind of a tiny cause for concern. Now, the other side of this, Goldman Sachs said job openings in virtually every industry are above 2019 levels. Layoff and jobless claims are still low. The increase in the unemployment rate since April has come entirely from an increase in the size of the labor force rather than the decline of employment. The combination of elevated job openings, continued employment growth, and high labor force participation is unlikely to trigger a vicious circle of job loss. So Goldman is taking the other side of that. I don't know. I think the unemployment moving up is something to watch, though, in terms of like that could not be a good thing.
Let's talk about spending. So we've got Bank of America, total card spending per household fell 0.5% year over year in October. Services still growing strong. Retail, excluding restaurants, dipped pretty significantly. So it fell a little bit. Really, not a ton to glean out of this. But interesting is that lower income households showed the biggest drop in year over year spending. So if you have an income under $50,000, your spending fell significantly.
That makes sense. Go up a little bit in the doc here. Joey Politano did this average real wages, and you know what Jeff Mackey last week we talked about. He said people secretly miss the pandemic.
Yeah,
I think for certain people, the unemployment insurance they were getting and the checks they're getting from the government meant their wages were higher than they had been otherwise in their job. And if you look at this average real wages here chart, this huge spike in 2020. I think there's something to that where people were better off financially during the pandemic than they are now in terms of like the jump in wages that they got. And so I think there is something to like that being another case of why people are like they felt this sugar rush and then it went away.
Yeah, I definitely think there's something to that. Another thing that doomers have been saying is that once student loan payments restart, which they have, that's going to be a lot of money that's drained out of the economy, right? You've heard that?
Yeah, I don't really buy that one.
Well, according to Bank of America internal data, we do not see an adverse impact to spending for households who resumed student loan payments in October. Data's right here. They show households that paid student loans prior to October, households that resumed payments, and all other households, and nothing there.
I mean, don't we assume people who have student loans have higher than average wages? That's typically how it works. And that can handle this? I don't know. That's my thinking.
All right, here's something that I don't know if this is disinflation back to 2019 levels or what we're calling this, but Sam Rowe tweeted the New York Fed's Global Supply Chain Pressure Index. And there was an article this week about like what actually caused inflation and the differences between the US and Europe. And a lot of people thought that, and this is definitely part of it, like the supply chain stuff was not an insignificant cause of price increases, right? Demand turned back on and it took supply months to catch up. But all of that pressure has been erased. The supply chain is totally fixed.
Which is part of the reason I think for the soft landing-ish thing that we've had. Things ready themselves out. And the other thing is like no one wants to think this way, but Europe is in a way worse situation than we are. Like the FT did a piece on that, saying that like the US growth is accelerating and the EU had even worse inflation. Like it could have been worse. People complain like the US fiscal response is way too big. I think it's probably the most successful one of any country that in the developed markets. It could have been way worse. Inflation could have been higher and growth could have been lower. That's a double whammy that would have made things even worse.
There were stagflation calls, were there not?
Oh yeah, Larry Summers was all over that one. Stagflation is here.
Nailed it. All right, so you might think the economy is unhealthy due to personal anecdotes or whatever, but these are the facts, Jack. From S&P, a total of 50 companies filed for bankruptcy in October, down from 61 in September, according to the latest S&P Global Market Intelligence data. This was the second lowest monthly total for the year so far. And they've got this going back, well, just to 20, is that 2020, 2020? These aren't rising.
Well, that was another doomer thing is that low rates are just making for a zombie economy where all these zombie corporations are staying afloat because of low rates.
Well, that was true.
No, but I'm saying, wouldn't you expect more companies to be failing now that rates are higher? Or would that take more time?
That's a good question. Well, I mean, look at the stock prices. You would assume just based on that it is happening. Market cleaned that up real quick.
Or those companies are just underperforming. So Bank of America has this long-term stock market chart going back to 1824, which looks amazing. I mean, this is my investment philosophy in one chart. And if you put this on what are your thoughts on log charts though? Okay, for going back this far, if you put it on just a regular chart, it would look weird because it would look like a
No, it would if you put it on a regular chart, it would be at 1 for the first 150 years, and then it would just
right,
go
and then it would
higher
shoot up.
and it would just go vertical. So you need to log this. The only problem, and by the way, this is my philosophy too, right? Stocks usually go up. And it's not a problem, but like this makes it look a little bit too easy.
Yes, it makes the
the Great Depression is a blip. I mean, come on.
That's what I'm saying. Is it makes the downturns not look as big as they were.
One of my favorite quotes, I think. Oh man, who is this from? Maybe The Money Game. I can't remember. Statistics tell a rather bloodless tale.
Yes, good one.
Right, like you look at this, you're like, ah, what?
Yeah,
I mean,
it's easy. It's yeah. I think you have to pair this with a drawdown chart.
Yeah,
just to show. Okay. I mentioned that the NASDAQ is up, what, 42% this year. The S&P is up.
That's hard.
17.
That's hard to believe. What's the QQEW? The equal. I bet you even the equal weight is having a great year. I'm gonna guess that the QQEW is up 30%.
Probably at least 25.
What do you think? Let's see. So the equal weight NASDAQ 100 for this year 2023 is up 21% year to date.
Not terrible.
Not so bad.
The other thing with the equal weight, like people keep saying, like the S&P is just being driven by these stocks, and I don't care, right? I really don't care because most people own index funds.
You like Tommy Lee Jones and
yeah, but
The Fugitive.
I didn't kill my wife. I don't care. Who actually owns an equal weighted index? How many more people own a regular index fund versus like no one actually owns an equal weighted index fund? Like a handful of investment nerds. People own mid caps and small caps, but
remember when we were speaking about all of the actors with 3 names? Like Tommy Lee Jones, his name is just probably Tommy Jones or Tom Jones.
Yeah, Mark Paul Gosselaar.
Somebody set it straight. When you get to Hollywood, there's probably 400 young Tommy Lee Joneses. Anyway, that's that for actors' names. But I saw a tweet the other day, and yes, it's true. The mega cap are carrying the index, but this is directionally right, not 100% accurate. Like 80 stocks in the S&P were up 50% this year.
Right.
You know?
That's a decent amount. So the NASDAQ 100 on a total return basis is actually closer to all-time highs than the S&P now. The NASDAQ is less than 5% from all-time highs. The NASDAQ 100. The S&P is about 6% away.
Can we talk about all-time highs?
Sure.
So the S&P 500 has gone 467 trading. This one bespoke. 467 trading days without making a new all-time high, which is
pretty long time.
The longest streak since the GFC.
But don't you think being within spitting distance of it makes it feel a little better, even though we haven't technically hit one?
Yeah, we're right there. We're right there. Okay. Here's a great chart for a great data point from Ryan Dietrich. Remember last week, I think I was talking about Sentiment Trader had a chart similar to this, and I was like, listen.
What, small caps? Yeah.
No, not small caps. I like the studies that show what happens because there are behavioral patterns in the stock market. When you get a washout and then this happens, like to me, that's much more explainable. That's like structural human behavior than say like biotech does well in February, right?
Yeah.
Where it could just be like, noise. So this is from a week ago or 2 weeks ago. I'm sorry. Yeah, this is from November 4th. I think he tweeted this. We officially saw a super rare Zweig breadth thrust today. The rare signal is simply stocks moving from very oversold to very overbought in less than two weeks. That's all you need to know. Went from very oversold to very overbought. That's a quantitative analysis done on that. All you need to know is since World War II, the S&P 500 is higher a year later every single time. And it looked like that's happened, I don't know, 15 times or so. Again, when there's a washout, when things go from very oversold to holy shit, everybody get back in the pool, that's usually a durable bottom. Doesn't mean it's going to hold forever and ever. I don't know.
We were in a correction. Like we had like a double correction there for like 2 days. And then stocks just rocketed higher.
Yeah, right. We were in correction territory. That's right. 2 weeks ago. We were down 10%.
All right. This is an amazing. Yeah. This is an amazing stat from Quantian on Twitter. Russell 3000 names by cumulative short P&L over the past decade. Shorts made about $80 billion of profits on about 30% of names and lost $900 billion across all names over 10 years. Just That's amazing.
This idea during the pandemic that short sellers were evil, I mean, it's truly hilarious. It is not supported by data.
No, I mean,
Short sellers don't put good companies out of business. Exhibit 1046.
it is real. I can't imagine being like, not only the mindset you have to be in, and like if you're like a fundamental person who's like looking through the accounting data and stuff, but I mean,
People
you
say
could
short
find
sellers are people say shorts are manipulating the market. It's the opposite.
way.
It's the
Yeah.
opposite. Everybody is aligned to manipulate the stock market to go higher.
Right.
And people inside corporate America are incredibly good at doing this. They chop the fat. They pull back. Whatever they have to do to protect their margins, corporate America is very good at doing.
And even if you have a crappy company, if you're in the midst of a bull market in an industry or whatever, like the rising tide lifts all ships.
Everybody is incentivized to go to work to make your stock prices go higher, right? To make more money. That's it. That's the bottom line. So anyway, the short seller is not an easy job.
So this chart from courtesy of Daily Chart Book via Jeffrey shows small caps now represent less than 4% of total U.S. equity market. Do you think, how much of this is small caps underperforming versus just these big stocks have gotten so much bigger than they were in the past? I mean, it's a little of both, obviously.
Both. Well, so Jeffries, to complement that, same thing, I guess, said the Russell 2000 is cheapest our absolute valuation model has been since December 2012.
Again, back to people who have to complain. If you want to look for stuff that's not overpriced right now, if you want to look outside of the Magnificent Seven or NASDAQ 100 or whatever, there's a ton of cheap stuff, and there's 5% money market yields and T-bill yields and bond yields. Like the opportunity set for investors these days is actually pretty good.
You know the total return for small caps over the last 5 years, over the last 3 years?
Is it negative?
It's 5%.
And what's the S&P done in that time? Up 40?
Up 30. Huge spread
Okay.
there. Speaking of all-time highs, the Russell 2000, this is from Sentiment Trader. In the coming week, the Russell 2000 will have gone 500 trading days, nearly 2 full years since it last closed at a 52-week high. That's the third longest streak in the index's history.
So I know a lot of people want to see this huge washout in like the stock market, like the stock market's going to fall 60% or whatever. Like, it's not like things have been amazing.
Damn it, we had it. We had the washout.
Right, we did it. 2022 was the washout. It was one of the worst years ever for a diversified portfolio of financial assets. And, yeah.
I mean, even from an all-time high, so the Russell 2000, I'm not even talking about the pandemic crash, which it lost over 40%. It made an all-time high in the fall of 2021, and then it fell 35%. Is that not a washout? If you're waiting for a 70% washout, you'll be waiting a long time. All right, let's talk about the labor market, Ben.
All right. I did a tweet. I think it's pretty realistic. This is me going after the financial media again. In 2020, it was no one wants to work, right? The government is paying people not to work. 2021, they called it the Great Resignation. Everyone's quitting, getting new jobs. And that made sense because wage increases were way higher for people changing jobs.
By the way, the people don't want to work thing, I don't think that was fully fabricated.
Well, no, mates. I mean, they were paying people literally to not work.
Yeah.
2022 is quiet quitting. People are quietly quitting their job. And then 2023 is now no one wants to work anymore. This is from the Wall Street Journal. The white-collar labor market is softening to a point that companies are encountering an issue that would have been unthinkable in the area known as the Great Resignation. These days, too few people are voluntarily leaving their job. Turnover has declined so steeply that some large employers at companies now find themselves over budget on certain items, requiring leaders to weigh whether to postpone projects.
Too few people are voluntarily leaving their jobs? What's happening here?
I think the thing that is the most surprising to me in terms of like financial media, and I'm not saying like financial media is all evil, but they seem to be taking the side of corporations against like consumers and households and workers in all of this. Like, corporations never get blamed for anything these days anymore. The media feels bad for corporations. First, people were quitting too much. Now people aren't quitting enough. It's like, this is a good thing for people in jobs. Like, we should be excited.
I almost feel like some of these articles are written just to trigger people like us.
It must be. I can't think of any other reason.
I'm sorry, I didn't read the article, but this just sounds like such horseshit. The new headache for bosses, employees aren't quitting. Like, is everything, it's all just for clicks. I'm sorry. I hate to be so cynical. That's what it is.
It is. I think you're right.
I mean, Okay, whatever. Let's talk about crypto for a second. Bitcoin's market demand has outpaced its supply. This is a tweet from Tropic. Okay. Bitcoin's market demand has outpaced its supply, a clear sign of robust positive momentum. In just one day, a whopping 700,000 new Bitcoin addresses joined the network. This expansion is considered one of the most reliable indicators for price predictions.
It's interesting that people are piling into crypto now a little bit because the whole idea of a Bitcoin ETF is that it'll make it easier to buy crypto. And it's like people are buying it ahead of it. You'd think people would just wait to buy the ETF if it's new people coming in.
And so I saw another tweet that I thought was in the doc, but I guess it depended from Will Clemente, showing something about how money is coming out of stablecoins and going into Bitcoin, which I guess is an interesting analog for what probably won't happen. We've been talking about how a lot of the money that's parked in money market mutual funds is just going to stay there. So money's coming out of stablecoins going into Bitcoin. And so there's a hell of a rally underway. And I don't want to say unfortunately, it is what it is. It's just a number go up thing. Right?
That's the funniest part of it. It's not like it's rallying on some sort of innovation. If anything, crypto is taking a step back by going up because of going into an old legacy financial product that's been around since 1993.
But guess what? You know how you said you're doing your Tommy Lee Jones. I don't care about that the S&P is driven by only 7 stocks. True. I don't care.
People don't care why the price is going up.
Bitcoin holders, myself included, I don't care why it's going up. I'm not like a zealot for Bitcoin rehauling the society. I don't care. I own it as a financial asset. And the number's going up and cool. Why? I don't care. I'm just making the observation.
That's fair. The money gets cashed all the same, right?
Yeah.
I was holding out for tokenizing the entire world, but I guess that's not going to happen anymore.
That's coming. It's coming.
All right.
So there was an article. Who wrote the article? Was this Fortune? I can't remember who did this. Your NFTs are actually finally totally worthless. This was
some research company did a whole study on it. Yeah.
Okay. New report from industry researchers finds that 95% of the once hyped crypto assets have hit rock bottom valuation. Yeah, I mean, this was, not terribly surprising that most of the stuff was worthless. But somebody tweeted the craziest thing about someone bidding $3 million just now, and this is for a CryptoPunk. The craziest thing about someone bidding $3 million just now for something that's actually finally totally worthless is the owner won't even accept it. Kind of wild.
What am I missing here?
So CryptoPunks, there's been a huge rally in NFTs.
Okay.
CryptoPunks, Bored Apes, they're going nuts. Somebody was offered $3 million for their CryptoPunk and they declined the offer.
Oh, okay. I gotcha. I'm sorry. It's still dumb. The CryptoPunk and Bored Ape thing is still stupid.
Okay.
It is.
Well, fine. That's your opinion. I mean, I don't.
It never made any sense, and it still doesn't. That's all I'm saying.
Okay. Was 2022. So one of our guys, Nate Jefferson, asked ChatGPT, was 2022 the 7th or 8th worst year in the S&P 500 history? And ChatGPT said the S&P 500 index had a negative return of negative 10.3% in 2022, according to an article from A Wealth of Common Sense.
I guess my job's safe.
How about that?
I knew ChatGPT was a hack, stealing my stuff.
How about that? So, Ben, we spoke earlier in the show about
that means when the AI overlords just have the things in the back of our heads and they're just sucking stuff out of us, I'm going to be safe. I'll be like the teacher's pet for the AI machine that's taking over the world.
You know what movie came and went? I don't know if we spoke about this, that nobody saw. What was the movie with Denzel's son? Was it The Creator?
Oh, yeah. Did you go see that?
I did. I didn't get great reviews. I wanted to see it.
Okay, I'll see when it comes out on video.
It was in and out. We spoke about if the Fed says they're done, would financial conditions loosen to the point of basically reversing all that they've done and risk more inflation? So, for this from Bloomberg via Carl Quintanilla, the average 30-year mortgage rate plunged last week by the most in more than a year, helping generate the biggest advance in home purchase applications since early June. So, interest rates went from 8% down to 7.6%. People are like, it's a feeding frenzy.
So the thing is, housing was already basically in a recession. Which is kind of crazy. We saw that 4.9% GDP print.
Activity is in a depression, but prices are still. But prices are still in a bull market.
But here's why this is the automatic stabilizers in the economy or whatever. We're going to have other pieces of the economy probably slowing down. when rates are getting cut, and housing could actually help. Housing could pick up the slack if there's more activity. Like this, it could be like some people might worry it's going to cause a boom in inflation, but I think there's going to be other parts of the economy that are slowing, and housing activity could actually help a little bit instead of hurt.
Yeah.
Right? Okay, so Logan Motoshami wrote a piece for Housing Wire about why home prices won't crash in the next recession. And it was a simple supply demand thing, right? Just like you said, there's pent up demand that if mortgage rates fall, people are going to be coming in. And a lot of people I saw talking to Logan were like, whoa. Why would housing prices ever hold up during a recession? That makes no sense. And I think a lot of people have the recency bias brain of the great financial crisis of, well, every time there's a nasty recession, housing prices have to fall. So I looked at this. I looked at every recession going back to 1960, and there's been 9 of them. In 7 of the 9 recessions going back to 1960, housing prices have risen. They've only fallen twice. Once in the great financial crisis, of course, and then once in the early 1990s, which was a savings and loans crisis. So basically, the only time housing prices have fallen during a recession have been when there's been a financial calamity that's happened. Other regular run-of-the-mill recessions, housing prices have risen.
This is another reason why the GFC caught so many people by surprise, is because housing prices really have never fallen. There's no precedent for that.
That's the other thing. Housing prices don't fall that often to begin with. So that's why they've risen during recessions in the past, because it takes a lot for housing prices to fall on a nationwide basis. Now, that doesn't mean housing prices can't fall during the next recession, but it's going to have to be a nasty financial crisis probably to make it happen.
We got an email from a listener that is emblematic of the environment that we're discussing. My wife and I fall into the camp of growing family, don't necessarily need to move right this second, but quickly running out of space in our current home. Like most adults, we were always looking at Zillow, just in case something were to catch our eye. Well, out of nowhere it did, and we went from casually looking to agreeing on a purchase price to realizing, crap, now we need to sell our home ASAP in an 8% mortgage world. As someone who is in the industry, I'm paying close attention to all the same charts and data that you and Ben have brought up so many times on the pod. I consider myself typically pretty stoic, but I'm sure you can imagine how anxious I was to get my home sold. What transpired over the past weekend truly blew my mind. We listed late Friday afternoon. All weekend we had showings and people coming to our 2 open houses. And by Sunday evening, barely 48 hours later, we had 4 offers, all at asking or above, with many waiving inspections. Wow. I think it's worth noting that I think the home we are selling can be described as a good starter home. 3 beds, 2.5 baths. Point being, all these potential buyers were first-time home buyers. Another interesting observation was that all the offers wanted to put down the minimum, 5%. That is something that we don't spend enough time talking about. People aren't putting down 20%.
Yeah.
They could still get into a house. Now, the math doesn't make the math any easier. The payments are still, wildly expensive, but people are finding ways to do it.
That the 4 offers above asking and waiving inspections is crazy in an 8% mortgage world.
Here's a great chart.
It's a supply and demand thing.
Great chart from the Wall Street Journal. Homeowner improvement and repair activity. It's a 4-quarter moving average, and it's at all-time highs. So because people aren't able to move because of the 8% mortgages, somebody said, we feel like we have all this money and have nothing to do with it. And so people are remodeling or whatever. And this is another weird thing that you can never have thought of if you were just thinking about like textbook economics brain.
Wouldn't you do that right now, though, if you had the choice between like adding an addition on your house or fixing up the kitchen or whatever it is, or buying a new house? Like, you would do the addition in a heartbeat, wouldn't you?
Absolutely. So the housing market is broken, and so people are spending their money on other shit, whether it's vacations or home improvement or whatever. It's like I had all this money earmarked for a home, and I guess I'm going to spend it on other stuff now.
Yes. And you have even though a home equity line of credit is 8% or whatever, you still would probably pull that money and do it and just pay it off quicker.
So to this guy's point of first-time home buyers now make up 32% of all home buyers.
Right, which is actually down. The historical average since 1981 is 38%.
Oh, that's interesting.
So it's down a little bit. And the reason is because home buyers are getting older. So this is repeat buyers, people who have bought one in the past. The average age has gone from like 35 in 1980 to 58 now. In the Washington Post, and first-time home buyers have gone from 30 to 35. And the Washington Post is saying a lot of this is boomers that are either downsizing or deciding to move somewhere because they have all the equity and they have probably a paid-off home that they've lived in for 30 years. And so it's saying most of the activity right now in the housing market is actually being driven. It's a barbell. It's all first-time home buyers and baby boomers, which is interesting. So people, I guess you'd call us in the middle group, older millennials like us, if I'm a millennial, and Gen X are like just like staying put.
What year were you born?
3% more. 81.
Yeah, you're a millennial.
Oldest millennial.
Yeah.
All right. This is a good one from Jeremy Horpadal, who always does some good myth busting on Twitter. So one of the things I love about Home Alone is that every year it just comes into the discourse and it's more and more financial based.
I watched it. We watched it this week. It's that time of the year.
My kids are asking for it. I'm sorry. Call me a Scrooge or whatever. I'm shutting everything Christmas down until after Thanksgiving. My daughter wanted to read a Christmas book last night before bed, and I said, no, not until next week. Does that make me a bad person? Courtney called me out this morning and said, why would you do that? I really just didn't want to read the book, but I also, you got to have principles. So someone tweeted, the worst part about rewatching Home Alone is you just know Kevin's parents bought this house for like $250. I think people don't realize, like, the McAllisters were rich. We don't know what he did, but this Jeremy Horpadal guy says, actually, it's sold
Wait. What do we think Mr. McAllister did in Chicago?
Did he like trade cattle futures or something? Maybe.
Yeah, I was saying he was a bond trader.
Yeah, something like that. So it actually sold for $875,000 in 1989, which is 7 times the median home sold that year. So it was a mansion, right? I looked at it. If you inflation adjusted that price from 1989,
that's a mansion. Look at all those windows.
If you inflation adjusted it, it would be $2.2 million. And Zillow estimates right now it's worth $2.3 million, which I would have thought he would have got a premium for being the McAllister's home. But this house sold for a lot back then, and it's basically tracked inflation ever since, which is kind of surprising.
Huh.
I probably need some work.
All right, let's do some quarter stuff. Expedia CEO and the consumer. We haven't seen really anything on the consumer side. We keep looking. You'd have to squint really hard and look by sub-region to try and cut it by price point and a lot of things to really see anything noticeable.
I'm writing a piece on this. I found an old New York Times article from the late 70s that was about how people are changing their habits. And it probably took a long time for inflation to be that high. And it's talked about people not traveling anymore, not spending money, and like wearing old clothes for longer. And it really changed people's behavior for a while. And that's the thing that I just don't think we're seeing in that many people right now, that many households.
Here's another thing. I wrote a post a couple of weeks ago that the ad market is the first thing to go. Like that's the leading indicator to look at. And obviously
Iger talked about that on the Disney call last week.
So this is from the transcript. Ad markets picking up from the lows. News Corp CEO, specifically at Dow Jones, advertising was down 3%, which was a market improvement after a 14% decline in the prior quarter. Both digital and print report improvement in trend lines. So all in all, pretty good. However, I don't want to discount this. The average mention of weak demand for consumer sectors is basically at an all-time high. Now, I wonder if this is company specific and they're just casting blame. I don't know.
Mentions include lower, softer, moderating, and weaker. What if softer includes softer landing? I don't know. Okay, here's your survey.
You sly dog you.
All right, 64% of Americans would welcome a recession if it meant lower mortgage rates per the USA Today.
This is such bullshit. This is so easily debunkable. First of all, how many new home buyers, or how many people are looking to buy a home? What percentage of the population right now is looking to buy a home but can't?
Every year there's like 5 or 6 million homes sold out of 160 million. It's like less, it's such a tiny amount.
So if we would say, do we think that 5% of the population is looking for a home right now? Well, no, there's 70 million millennials. I don't know, fine. So let's just say aggressively.
It's like 5%.
Let's say aggressively it's 15% of the population looking for a mortgage. So USA Today is reporting that 64% of Americans would welcome a recession if it meant lower mortgage rates. No, they wouldn't.
Yes. There's
nonsense.
No way.
Just absolute nonsense. Surveys are garbage.
I don't know how the question was asked, but yes, there's no way that's true. I'm sorry.
All right. Who's missing their credit card payments? This is from Heather Long. The answer is millennials. So it shows the share of credit card borrowers who are newly delinquent. And if you look at Gen X, Gen Z, and baby boomers, it looks like they're like, I guess, sort of back to 2019 levels. Millennials are slightly higher. So 2.7. I mean, it's really, there's nothing to report here, is there?
It's paper thin. All right, this is interesting. From BLS, average consumption expenditure by age group in the U.S. And it shows it goes up from 25, peaks in your 45 to 54 age range, falls from there. And it also shows like what you spend your money on. I don't think a lot of people think about this kind of thing in terms of retirement. That like you actually spend less money in your older years than you think. And you probably like the Die with Zero guy. Did you ever read that book or not? I know I've talked about it before.
No.
He says that not only should your spending peak in your 40s to 50s, your net worth should peak as well, because that's when you should start spending the most of it, because that's when you, like, before your health starts to decline a little bit.
Well, this is a great segue to Christine Benz did an incredible post about people not spending enough on retirement.
Yes,
And
I read this too.
she said, even the retirees who spend in line with our base case, which is take it 3.8% initially and then adjusted, inflation adjusted. So she said, for example, people start retirement with $1 million, withdrawing $38,000 initially and inflation adjusting. The median ending balance was $3 million more for balanced portfolios and even higher for more equity heavy portfolios. So people are understandably so too conservative because there's no penalty for dying with too much money. But if you run out, you're f***ed.
Yes, that's longevity risk. And I think people always assume the worst case scenario is going to happen to them.
Speaking of longevity risk, we just did a very interesting episode with LifeX, which is a Stone-Rich product that, I don't know, it's next week or the week after, but if you're a financial advisor, you're going to want to listen to that one.
It was interesting. All right, here's another scary headline. Americans are pulling money out of their 401k plans at an alarming rate from CNN.
Alarming? Really? All right, what's the numbers? Let's hear it.
All right. It surged the first 3 months of the year to 15,950, a 36% increase from the second quarter. That sounds bad. Unfortunately,
wait, what does that number mean? 15. What does that number mean? That's
how many people did these hardship withdrawals out of their 401k? Almost 16,000 people. 36% increase. That sounds like a lot. Until you realize that there are 4 million people in the plans. I think that's 0.4% of the people.
Okay.
It's not great that people are doing this, but it's a tiny, tiny number.
All right. So you're not going to believe this. You're not going to believe this, Ben. Have you ever gotten a text message from somebody where they leave, it's a voicemail and a text message?
I know you can do that. I don't think I've actually got one of those before.
Okay. So I've gotten a few and I don't think I hate it. It's interesting. It's a voicemail in a text message, right? However, I got a voicemail DM on LinkedIn. That is over the line.
That's aggressive.
But he goes, hey, Michael, blank here. I work in what does he say? I operate a boutique life insurance brokerage. Imagine sliding into somebody's DM with a voicemail.
Wow.
I guess this is like, there's a thing now?
It stood out at least.
All right. Let's talk about Netflix.
Okay. This Lucas Shaw put this biggest hit, the 10 biggest shows by U.S. consumers in the first half of 2023. And I don't think I watched any of them. Nope. You People, Murder Mystery 2, The Mother, The Night Agent, just Ginny in Georgia. And
I have not seen a single one of these. Not even Extraction 2, which I have to say. I haven't seen a single one.
He says that fewer than 5% of original programs on Netflix last year would have triggered performance bonuses under the new contract with the Writers Guild of America. Remember they said, like, if a certain amount of people watch it, you're going to get a bonus? It's which means you have to be seen by at least 20% of the U.S. users. It's very rare. But I mean, their TV show is just not great, but I guess they just go quantity over quality.
Paramount says streaming subscribers will see even more price increases moving forward, a trend that's permeated throughout the entire media industry. So Yahoo has this cool graphic breaking down all the different fees for what stands out to you here?
Well, here's another inflation thing about the 2010s that probably is warping people's minds. There was way too much stuff that should have cost more in the 2010s, but it was being subsidized.
Yes. Uber.
Right? Like
everything.
Streaming services should have cost more in the 2010s when they came out. Disney was charging like $6.99 a month. Like, it was way too, all this stuff was way too cheap, and it should have been more expensive for what you get from it.
Speaking of streaming, so Disney Plus has lost nearly $11 billion.
Sounds like a lot.
Let's see. Disney reported that its streaming business is making progress. They lost $387 million in the most recent quarter, down from $1.47 billion a year earlier. Unbelievable.
I couldn't tell you the last time we watched something new on Disney that wasn't old. We use it as just a way to watch old shows and movies.
You know what we watched this weekend with the boys? Spider-Man Far From Home. Great movie.
Okay. My son loves all the Spider-Man movies. So we've seen
Great movie. All right. So I nailed this. Now that, I mean, whatever. This was very easy to see coming. Remember I said The Marvels was the absolute worst trailer I've ever seen in my life?
It bombed, right?
$21 million in opening day, the lowest in MCU history.
Good.
So here,
I hope they just stop with all the Marvel movies.
they're not going to. Here's my take. Here's my take. And I was listening to The Big Picture, and they were talking about this. That they did what's the Stinger? They did a Stinger and they showed Beast. I think they're gonna go hard at X-Men, and they're gonna stop making junk. So all like the tier fringe, that's over. That is over. They're gonna go after X-Men, and that's gonna revive comic book movies.
Okay.
I'm all in for X-Men stuff.
Deadpool is like the only one I like because I'm a big Ryan Reynolds fan.
So Wolverine's gonna be in I love X-Men movies. I will be at the theater for every one of those.
I can see that.
Yeah, love. Warner Brothers. Oof. Warner Brothers
ad
lost.
Revenue per quarter. Does this just mean because they're getting lower ad revenue from TV?
They lost 1.4 million domestic subscribers. That's a lot. What a debacle. The Max Go, HBO Max, HBO Now. Look at this ad revenue per quarter. The lowest level in, I don't know, 3 years. This is bad. Bad.
Netflix broke everything.
Everything.
It really did.
Okay. So we have family photos on Sunday, and Robin said,
Well, that's fun.
Love doing that. Robin said, "Here, tell me if you like any of these sweaters." So she shows me the bag, and it's J. Crew, and I said, "What am I, Ben Carlson?"
How did you like them?
It's a sweater. I'm like, I have 4 of these. So she's like, yeah, whatever. All right, you know what I have one of?
Yeah, they don't cost $250 at J. Crew.
So it was $90. I said, what are you, crazy? You spent $90 for this? And she showed me the receipt. It was half off. Credit to her. 45
You never
bucks.
buy anything from a J. Crew banana place without being 40 or 50% off. Never.
All right, but I have one vest.
Okay.
And I wore it last week or 2 weeks ago. And I think I like how they look. But
vests are style over substance. I probably have 4 vests. I'm a vest guy. I'm not gonna lie. I'm a finance bro. I don't care. I'll own it.
Okay.
But whoever has it where their torso is hot or cold, but their arms are warm.
Right. So that's where I'm going.
It's useless. It's just for looks.
Okay. So I'm glad we're on the same page here because I like how it looks, but like my back was really hot. You know what I mean? Because
it's not vests aren't functional. They just look good.
Okay. All right. Because my back was too warm. I was like, and then I couldn't take it off because the shirt underneath was not like anyway, just not sure how I feel about that. So I was in Vegas last week, and there's a thing there.
I'm sure there was no one there spending money, right?
No, it looked like a depression in Vegas. I'm sure this is again function over no, this is the opposite of that. It's probably function over style. There's clear backpacks.
I thought you only had to do that if you had at a school or something that has a lot of crime.
Like, there's got to be a reason why people are walking around in clear backpacks, right?
I don't know. Must be a Gen Z thing. I don't know.
I don't know what it is, but I'm guessing somebody will email us. All right, let's talk about. Sorry, the show went long today. A lot to talk about. Busy week, busy couple of weeks. Recommendations. What do you got?
All right, David Spade was on the Pete and Sebastian show. I love David Spade. I've been a fan of his forever since like PCU days and Tommy Boy and stuff, obviously. But like the fact that I love his podcast. I think he's like one of the quickest, sharpest guys there is. And he was just telling story after story about SNL and movies and Sandler Farley.
Who's Pete and Sebastian?
It's the Sebastian Maniscalco podcast.
Okay.
They interviewed him and they just let him go. They like didn't interrupt him. He just talked the whole time. It was great. I watched The Curse. It's What's the new Nathan Fielder show on Showtime with Emma Stone. I don't know who this show is for. I think it's only for like 30 and 40-year-old dudes who live in Brooklyn.
What's it about?
Who have a TV podcast. It's essentially a satire of a couple who's doing an TV show, but everything he does just makes you feel uncomfortable. It's just like, how uncomfortable can we make you feel? And like I watched the show and I'm like, that just made me feel bad. I don't know I don't know who it's for.
Are you gonna stop or?
I think so. I'm sure there's a lot of people who are like, this guy is a genius.
Okay.
Doesn't do it for me. All right. The Killer on Netflix. It's the new Fincher movie on Netflix. I thought it was the best movie Netflix has ever had. I thought it was excellent. I thought it was like a throwback to movies they don't make anymore. Thought they could have landed the plane a little better on the ending. It was a very deliberate movie. So I was not surprised to say you didn't care for it that much. But I thought it was great.
Whoa. First of all, you're putting words in my mouth. I didn't say I didn't care for it.
What did you say?
I'm pretty sure I said I liked, didn't love.
Okay. All right. I thought it was one of the best movies I've seen in a while. I thought it was really, really good.
Okay, so for those who don't know who David Fincher is, this is his filmography. Alien 3, which was a bit of a debacle.
Who doesn't know who David Fincher is?
Well, I'm just going through his movies. Hold on. Not everybody's a movie guy or girl. All right. 7, The Game, Fight Club, Panic Room, Zodiac, The Curious Case of Benjamin Button, The Social Network, The Girl with the Dragon Tattoo, Gone Girl. I won't mention Mank, but he did Mank, and The Killer. So not bad. Not a bad pedigree. So I wish I saw The Killer in the movie theater. So I think I would have loved it.
It felt like it should have been in a movie theater.
Do you agree with this? I preferred the first half to the second half.
Yes, the ending wasn't great. It was a great fight scene though, but
that was a great fight scene. So just for me personally, listen, I liked it. I did like it. I just didn't love it. It was a little bit too cerebral for me.
It was. I thought Fassbender was awesome. It was like an even-keeled movie. Like it stayed at this level. It was very.
How about this? If a different director tried to do this movie, it would have been horrifically unwatchable. He's a master.
Here's one question.
No, I liked it. I did like it.
Here's one thing I noticed about movies though. So he because he got beat up and he took these pills to make himself feel better. How come people in movies never drink water when they take pills? People in the movies take pills and swallow. It'll like chew the pills. What insane person does this?
That's a truly funny observation.
I've never taken a pill without a sip of water.
Yeah, that's psychotic shit.
They always do this on movies and TV shows.
So I saw Eddie Murphy is coming out with a new movie, which I'm very excited about. Just kidding. It's called Candy Cane Lane. What the hell is this garbage?
Is that a Disney one?
It looks like it's on. Is this Amazon? I don't know. I think it's Amazon.
The Rock has a Christmas movie coming out too.
Come on. All right, so I've got a few things on my list. I watched Old Dads on the Airplane. I loved it. It's written and directed by Bill Burr. It's a Bill Burr stand-up special inside of a movie.
That's what I thought too. Yep.
So, listen, I loved it for what it was, right? Like it's exactly what you think it is. If you like Bill Burr, you'd like the movie.
That's a good airplane movie.
It's a great airplane movie. I saw a deeply disturbing movie, disturbing on the lines of Speak No Evil. If you saw that horrific monstrosity of a movie, which was a great movie, this is of the same ilk, cut from the same cloth. This is not for horror tourists or beginners. This shit is grisly and gnarly and holy cow. It's called When Evil Lurks. I think it's Argentinian and it's on Shudder. So if I'm talking to you, you know what to do.
I don't understand anything you just said.
Okay. Well, I wasn't talking to you. I was not talking to you.
Okay.
I was not talking to you.
Argentinian? Jeez.
All right. So did you see the new Ghostbuster trailer?
There's another one?
Looks great. All the originals are in it. Bill Murray's in it.
Oh, okay. I actually didn't mind the reboot they did with Paul Rudd.
So I haven't seen Ghostbusters since I was 5 years old. I have zero
I
memory.
watched it with my kids. They love it.
Oh, really?
Oh, yeah.
Okay. Maybe I'll do that. All right. Let's talk about real quick before we wrap up the best movies for the rest of the year. There's some good movies coming out. Godzilla -1 looks awesome. And I'm not a big Godzilla guy. But
They make a new one of these like every 2 years.
This takes place, no, but this is different. This takes place right after World War II when Godzilla was born, I guess.
Oh, so it's historically accurate.
This is based on a true story. It looks great. Ferrari, the Michael Mann movie.
I saw a preview for that. It looks pretty good.
Napoleon, the Ridley Scott film.
I might go see that in the theater.
The Boys in the Boat, George Clooney.
I don't know what that one is.
Remember that book? It was on every... The Boys in the Boat is the book that was in every airport for the last 10 years.
Oh, okay. I missed that one.
Silent Night, a John Woo movie. And last but not least, A24 is making The Iron Claw.
I think that looks good.
The Texas Tornado and the Von Erich family. I can't wait for that. So there's a lot of good movies left. I'm excited. Been a really shit year for movies, but
yes,
looks pretty good.
There hasn't been much good to come out at all. So, all right.
All right, remember, the Compound News... No, Animal Spirits at thecompoundnews.com. The Smoke Show, Wednesday. There will be a replay. We don't know how it's going to be coming to you, but there will be a replay. But if you want to see it live, you can ask questions, be live in the audience on Zoom. Hit the link in the show notes. You have to be a financial advisor to do it. And we'll see you there.
No more Mr. Nice Guy. Sick of people telling us we're out of touch. You're out of touch. That's the energy I'm bringing today. I'm out of touch. You're out of touch.
You can start calling us out of touch when we start doing cold plunges. Until then, f off.
Yes.